Good morning, everybody. This is Chris Robinson, Robinson Marketing, with today's pre-opening grain and livestock comments for March 2nd, Monday, the first day of the week and the first day post this Iranian conflict opening up. Got to get right to it. We opened higher last night in corn and beans, and now we are 20 off the highs in beans. I don't know what that means. Uh, Bullish, bearish. If you're a bull, I guess you want to buy this dip. If you're a bear, I guess you're happy that you're hedged or protected or short. We have had a tremendous rally, 21-month highs in the beans. Um, I don't know why somebody that grows soybeans wouldn't at least look at rewarding that rally or look at setting a hedge, but to each his own, right? I make my recommendations. I make the recommendations. Um, I make the suggestions. You make the decisions. That's the way this works. We did hit my cash sale target in new crop corn last night. The first one that we hit gets us to 10% sold. If you're looking for those types of recommendations, please subscribe to my letter. It goes out 6 days a week. I do Monday through Friday, as well as a weekly wrap. And I also have a weekly webinar where I kind of dig into the charts. And we're going to have a lot to talk about today. I can tell you that much. I'm working on it right now. And in the wheat's had a tremendous rally too, right where it's 7-month highs. Wheat's a little bit lower here right now. You have Chicago hitting 610.5, but again, it's already down at 596. So maybe the overnight, that was the exhaustion tip of a rally. If you look at July Chicago wheat, we were down at 530 on the lows. Here we hit last night 610. So is that 80 cents worth anything to anybody out there? I think it is. And if you're in my program, if you're working with me, I did make suggestions to get cash sales done. I did make suggestions to set hedges, and we'll continue to do that as the year unfolds. The big what if today is what's going to happen with the protein complex. I don't know what's going to happen with cattle. Early indications are, sharply sideways, right? That sounds kind of ridiculous, but that's kind of what we're looking at. The stock market's only down 500 points. It's not down thousands of points. You got to remember when the Dow is at 50,000, a 10% break is 5,000 points. A 20% break is 10,000 points. So people getting squawky about 500 points, I think they're missing the forest for the trees. Yeah, it's a big number, but it ain't as big as it could be if things really go sideways. So that's going to probably impact what's going on with cattle more than anything. How do the funds bet? Well, they're long soybeans. They are pretty much probably flat corn. They're long soybean meal, soybean oil. Soybean oil has had a tremendous rally as well, 28-month highs. Um, will that continue? I don't know with the volatility going on. But if I'm talking about the protein complex, right? Live cattle, fat cattle, feeder cattle, and the hogs, we could have some volatility today. We did have a 25% pullback of the last rally. I broke that all down in my weekly wrap. If you're looking for those type of technical levels, I do that every day. I do the homework so you don't have to do the homework. So, all right, on that note, I'm going to let you go. We'll see what happens today. Crude oil is still under the June 2025 high at 78.30. We're trading at 72 bucks and a half. We traded as low as 69 last night. So yeah, um, there has been some buying interest there, but I think whatever you're trading this today and the rest of the week, I'd expect higher than average volatility. Like I said, we've already had a 20-cent trading range in soybeans. I would buckle up. All right, guys, have a good day. If you need help, give me a call 312 638 8868.